Okay, this is trading for beginners who've never traded before. This is number 7 in my series, and I'm going to finish off with another rule. And with that, I'll go into some other information that help you trading. So the last rule that I have is do not fall in love with a trade. And I've done this, and I've lost money, and it's well known that you can't fall in love with it. If you fail at it, or if you win at it, you have to move on and look for another trade. What happens is you'll trade a stock. Let's say Amazon. You'll trade Amazon, for instance, and you'll make money on Amazon, and like, hey, this is great. Amazon's really good to me, and you'll trade Amazon again, and hey, it's good to me. And then all of a sudden you'll put in a trade, and because you just love Amazon, and lo and behold, it turns around and goes back on you. Hopefully you have a stop loss like I discussed earlier, and it goes against you, and hey, but Amazon was good to me, so you go into another trade with Amazon, and it goes against you again, and you lose money, and you start revenge trading, and you start martingaling, and you start doing all the things that I've already told you you're not. And to give you an example, I traded every day. I traded Apple on day trade, and I made $1,000 a day trading Apple. And it's just the system worked, and what I was doing, and every day it was like going to an ATM machine and taking out $1,000 out of an ATM. It was fantastic. And all of a sudden, and this happens in the stock market all the time, whatever system you're using, it stops working. So I traded Apple again, and I lost money. I lost my $1,000 instead of making it. And the next day I lost $1,000 again, and I'm like, okay, this is just sort of normal. Doesn't always go your way and everything else like that. And then after a number of trades, I sat down and I said, hey, this is not working anymore. So I had no problem in sitting down saying, okay, Apple was good to me. I made a lot of money. See you later. And I never looked back at Apple. I never looked at what the stock was and everything else like that. Eventually I did go back and look at it, and I'm like, oh, look at that. It made all that money. It went up so far. That's fine. I wasn't in love with the trade. I got out of it. I went on to the next trade. The next trade I was making money with, and there's different patterns. You see patterns in stocks that trade a certain way, and you trade them. I was in a mining stock. Every summer the stock price went down, and then in the wintertime it went up to double. And the reason for that is when mining companies do their surveying and their drilling, they do it in the wintertime because quite often the ground is frozen. In the summertime it's muddy and so on like that, so if they drive across, they chew up the ground. So they do their drilling in the wintertime. And so what happens if they're going to strike gold, like the company I was in, they're going to do it in the wintertime. Hey, we struck gold, and everything. So they do their drilling. The assayers look at how much it is, and I can't remember how much they need. I think it's like 1 ounce for every ton of debris they have to dig out. If they don't make 1 ounce per a ton, well then it's not worth their investments to go digging for it. So that every year I doubled my money on this mining stock, and then I bought it in the summertime, and wintertime came along, and it didn't go up, didn't go up. And at a certain point I said, hey, this is it. It's a dead stock. And I sold it and got my money out of it. I didn't lose money, so there it's at. And one of the reasons that happens is is the investment houses and mutual fund companies. Um, they treat this type of thing, gold mining stocks and stuff like that, as like lottery tickets. So they buy in when they want to be in there when they're going to strike gold. So of course, that stock, if they'd have struck gold, the price of that company would have just gone through the roof. And it would have been like winning a lottery ticket with the number of shares I had in it. But of course, to me, I was quite happy to double my money every year on this investment. And I did this year in, year out, until all of a sudden it stopped. And I'm like, okay, that's it. And I've gone back and looked at the company, and it's basically, it hasn't moved. It's still doing its thing, but the investment houses and so on like that, they've given up with it. And there's different mining companies, and depending on who it was, they go through these cycles as well when things are looking promising. And oil drilling companies and natural gas drilling companies, the same thing. All these speculative stops, they're hoping that they'll hit it big, and then they'll be able to sell out to one of the large oil companies or mining companies, or the investment companies will hold big shares in it and they'll make a ton of money. So you can't fall in love with the trade. When this trade stopped working, I said goodbye and walked away from it, and no hard feelings. But I've also been in some where I've gone, hey, this is going to carry on, and I've kept investing in it, and only to see my money go down the drain. So I had to learn to not fall in love with the trade, and when it stops working, I just walk away. It's the same with the Forex. You got 28 currency pairs. You'll be making money on the euro US dollar, let's say, and all of a sudden you stop making money and you start losing money. Well, you just stop and you go look at the Aussie dollar, Japanese yen, and you start trading that. And you don't fall in love with it. There'll be things you'll prefer. You'll say, hey, I can read this Forex thing better, or a stock, you can trade that. Like there's different companies and commodities. Let's say you can make 25% a year on different commodity investments. You buy home heating oil in the summertime, you sell it in the wintertime, and you make 25%. Because why? Well, nobody's buying home heating oil in the summertime, but in the wintertime, when it's cold, people are buying home heating oil. So you can do that. Well, there's also the possibility that it'll be a warm winter and nobody will be buying it, so the price won't go up. So you probably won't lose money, but you're not making money. Another example is potash. You make roughly 25% on potash every year, and that's, you buy it in the fall, and potash is used for fertilizer. So you buy it in the fall, and you sell it in the springtime. You sell it in the springtime because that's when farmers are fertilizing their fields and their crops. So of course they're buying potash, so that drives or fertilizer, so that drives the price of potash up. Of course, the farmers aren't fertilizing their fields in the fall, so the price of potash goes down. So you buy it in the fall, sell it in the spring, you make 25%. And there's a lot of commodities that are exactly like that, and you can make money just on that. But of course, if you fall in love with it, you can also end up losing money because, hey, it's going to do this and it doesn't do that. And if like we're seeing, problems with farming and stuff like that, well, you can also make a ton of money because in the fall time, because there's talk of food shortages and everything, people are thinking, okay, we're going to need a lot of fertilizer, so they start buying in the fall, expecting the price is going to go up big time, only to find out that the farmers aren't planting as much because they aren't getting the prices and things like that, and that'll drive the price down. And so you could end up losing money. So if you're looking at this and, hey, don't let fear and greed, you just standard investment. Some companies will do that. You'll see that at a certain time of the year, their price drops, let's say, to $45, and then 6 months later It's up to $55, and it does this continuously year after year. You could trade it and make money on it, and hey, you're doing great, and all of a sudden it stops happening for any number of reasons. Change in the market and in what they're in, or competition and so on like that. There could be any one of a number of reasons. So you can't fall in love with the trade. You have to sit down and say, okay, like if you're a fundamentals trader, it's making this amount of money, it's doing this, this is what's happening, this is the EBITDA with the company. So because of that, I'm going to buy it or I'm going to sell it based on that. And if it isn't working the way you want, you just walk away. There's a friend of mine trades Coca-Cola, and he lives and breathes investing in Coca-Cola. Well, that's great. He loves Coca-Cola. He's making money, but at any point, things can change in the market, and he could end up losing money on Coca-Cola. So to me, I think he's making a mistake. As long as he's doing it based on the fundamentals or the technical trading, on moving averages or stochastics or Bollinger Bands or whatever thing that you would like to use, that's great. So one of the things you need to do also as a beginner is don't buy into a paid program. Everything is on YouTube for free. Whatever you want to learn in trading, different styles, different indicators, so on like that, that's all on YouTube, and it's free of charge to you. And one of the reasons people do that is because the more views they get and the more subscribers they get paid from the ad revenue. So it's the same as with radio or TV. You're watching a TV show, and you get to watch it for free, but you have to watch a commercial. And so it's the same with YouTube. There's commercials on there, and as you load up, there's a commercial comes on, then the video comes on, and then partway through it jumps to another ad in there, and so they share that. So this is how presenters, and I would do it too. If I get big enough, I'll be making money off people who view it. So I don't need you to send me money. I'll make money off of ad revenue. This is why people ask you to share and to subscribe. It doesn't cost you anything. You just hit that like and you subscribe, and what happens? They make money, and it's free of charge to you. So everything out there on YouTube, if you watched it 8 hours a day on investing, you could watch a different video for 2 years, 8 hours a day, and never watch the same video twice. There's so much information out there. Now, once you know what you're looking for and stuff like that, you can invest in it. And for instance, you'll notice that a number of my indicator videos that I show is a person by the name of Oliver Velez, and he's a very renowned trader. The videos that I have linked in this page, which I'll give you the link to, I can't remember the year, but I know it was before 2015 that I put those videos up. So that's how long I've been following his lead. And I have actually recently, just because time allowed me to, I subscribed to one of his programs, and I'm learning valuable stuff from him. But he basically is putting a lot of it out there for free. The videos on YouTube are all free. They don't cost you anything to watch. He tries to put out a short video every day on training on different things and so on like that. He's highly respected, and there's other people I've subscribed to. I don't have their program, but I subscribe to their YouTube channel, and I watch the training and so on like that. And so they mainly are talking to people that have been trading for a little while and or experienced traders, where I saw a gap in the trading training. There was nothing for the absolute beginner to learn how to trade. So this is why I decided to, like I said, people ask me, well, how do you get involved? What do you do? It's like somebody puts a car in front of you and says, okay, here's the keys, go drive the car. Well, if you don't know how to start the car, you don't know how to put it in gear, you don't know how the brakes work, so on like that, it's pretty well useless until somebody shows you the basics. Okay, you put the key in, you turn it on, so on like that. So I noticed nobody was showing the absolute basics of, I've never traded before, what do I do? And this is why I got involved in this. And I thought, if people are asking me on the street and, in the restaurants how I do it, I thought, okay, well, I'll maybe, do these videos explaining to it. The page that I'll link, it's been up since before 2015, like I said. So it's been up there for a long time. I started trading in 2020 and winning and losing, it's sort of the 2 steps forward, 1 step back thing. I'm not a millionaire yet, but, hopefully one day I will be. As far as learning, any investor will tell you that they learn every day. So the top people out there, they're learning things. I would suggest Oliver Velez is looking for the next best thing that he could learn from, and so on like that. So you'll see the videos from him, and there's a few other ones on indicators. And, I'm a technical trader. I used to be a fundamentalist trader, and I got away from that because it didn't matter whether the company looked good, the stock price can go down, or whether this company looked bad, the stock price could end up going up. So I decided to do what's called, trading in front of you, and that's what the technical side is, where you look at the indicators and you say, hey, it's going up. So I'm going to jump in and join the trend. As I've told you before, trend is your friend, so you go with that. So you don't need to pay anything. Everything is out there on YouTube and other channels or sites, and it's free of charge. And like I said, you can learn so much. And a lot of what I learned, was off YouTube as well. So I'm not going to say that I'm some sort of guru. I figured a lot of it out the hard way before I started to say, hey, there's got to be better ways of doing it. And so I jumped on YouTube and started researching and so on like that. So yes, here's free trading, and do not rush to get into some sort of plan, because a lot of these things, they're get rich quick schemes. They're telling you, hey, for $1,000 you'll be a millionaire in a year, and you jump in and you end up losing all your money. So be slow, very slow to pay for any trading. I would suggest that first 2 years you just stick with YouTube, and then from that you can decide what works for you and what doesn't. So this is the end of my videos on trading for beginners that have never traded before. So with that, I'd like to thank you very much. And if any of this has been valuable to you, please hit the like button and subscribe, because as I explained, if I ever get enough viewers, I'll be making some money off of it, and it won't cost you a cent for watching them. So thank you very much, and good luck with your learning, because at this point you're going to be learning, you're not going to be making money. So until you get your paper trading or your practice account or your demo account, until you get that making money, stay with cash in your bank. Don't bother going into the market. And like I said, once you figured that part out, you can go to your next step. So thank you very much, and good luck to you all, and good health to you. Thank you. Bye.